Incentive alignment is a concept in economics and organizational theory that refers to the process of designing systems, contracts, or rules in such a way that the interests of different parties become consistent with each other. In other words, it is about making sure that when an individual acts in their own self-interest, they also advance the overall goals of the organization or society. To put it simply, when incentives are aligned, people do what is best for themselves and, at the same time, what is best for the group. When incentives are not aligned, conflicts, inefficiencies, or even corruption can arise. The origins of this concept are linked to the study of principal-agent problems. This framework, developed in the 1970s by economists like Michael Jensen and William Meckling, explores situations where one party, the principal, such as a shareholder, hires another party, the agent, such as a manager, to act on their behalf. If the agent's incentives are not properly aligned with the principal's, the agent may act in ways that benefit themselves but harm the principal. Aligning incentives is the solution to this problem. Let's use some examples to make it clearer. Take the case of corporate governance. Shareholders want managers to maximize long-term firm value, but managers may prefer to maximize their own salaries, perks, or short-term performance to look good in quarterly reports. To align incentives, companies often use performance-based pay, such as stock options. The idea is that if managers own part of the company, their personal wealth will rise and fall with shareholder wealth, pushing them to act in shareholders' interests. Another example can be found in healthcare. Doctors are supposed to act in the best interest of patients, but if they are paid for every procedure they perform, they might be tempted to overtreat. On the other hand, if they are paid a fixed salary, they may have no incentive to provide extra care. Health systems therefore try to design mixed payment models to better align incentives between doctors, patients, and insurers. In public policy, tax systems also depend on incentive alignment. Governments want citizens to pay taxes, but individuals may want to avoid them. By introducing withholding at the source or offering tax deductions for certain behaviors, governments align individual incentives with collective goals, such as compliance and economic growth. A curiosity is how digital platforms use incentive alignment. For example, Uber aligns the interests of drivers and riders through dynamic pricing. When demand is high, prices increase, which motivates more drivers to get on the road, reducing waiting times for passengers. The platform design ensures that individual drivers' desire to earn more aligns with the system's goal of balancing supply and demand. But incentive alignment is not always easy. Misalignment can create major problems. In the financial crisis of 2008, many mortgage brokers were rewarded for issuing loans, not for ensuring those loans could be repaid. Their incentives were misaligned with the long-term health of the financial system, contributing to the collapse. In everyday life, we also see examples of poor alignment. Think about group projects at school or work. If everyone receives the same grade or reward, regardless of effort, individuals may shirk their responsibilities because their personal incentive is to free ride while others do the work. Aligning incentives would mean rewarding individual contributions or creating peer accountability mechanisms. Another interesting dimension is how incentive alignment works in teams and organizations beyond money. Recognition, social approval, and career opportunities can also align incentives. For example, open-source software developers often contribute without direct pay, but their incentives are aligned through reputation, learning opportunities, and career signaling. To summarize, incentive alignment is about creating conditions where individual self-interest and collective interest coincide. It is crucial in corporate governance, public policy, healthcare, digital platforms, and everyday teamwork. When incentives are aligned, systems run smoothly and efficiently. When they are not, inefficiencies, conflicts, and crises emerge. Up there I leave you more videos so you can keep learning law. Remember to leave us a like and subscribe.